Bob Iacino of TopStepTrader.com is standing by. And Bob, obviously what happened yesterday, we are still trying to get our heads around, still trying to figure out. We saw the market end at the lows of the day. But the expectation this morning, at least at this point, it looks like the futures are indicated a little higher. Is this a sense that we feel like this is a one-off situation?
Well, it's a pretty sick feeling trying to figure out what to do with your positions and switching back and forth to sort of watch the tragedy that's going on. It really brings back a lot of bad feelings and a lot of bad memories. So I think a lot of us were pretty shaken up by that, and that's why you saw that spike in volume, obviously, at 3 o'clock. Anybody who was thinking that that particular two-day dip, and, you know, the equities were going a lot lower before that happened, just kind of pulled out of the market. And that's kind of the sick feeling coming back from 12 years ago. So, but when you look at it this morning, again, it's difficult to try and figure out what the trade is going to be when something like that happens. But you do have to believe it in the short term. It's probably a buying opportunity, especially with the Goldman Sachs earnings, which people are expecting better, and the banks have done better. And if the financials can sort of get their feet under them for the medium term, you could possibly have this be just a little bit of correction that people were predicting pushed a little bit lower by the unfortunate events in Boston.
Bob, it's hard to separate the trading action yesterday. I mean, things looked pretty awful even before the news out of Boston, which obviously changed the entire sentiment. But when you look back at the sell-off yesterday before that news at 3 o'clock, how were things headed? I mean, it looked like things were maybe turning around a little bit earlier in the day.
Well, you would expect this kind of a sell-off if this was going to be the correction, followed by consolidation, and then followed by a decision by the market, whether it was going to continue and go back up to new highs or whether it was going to retrace that 10 or 15% that people are calling for. You would really expect that to happen over, say, a 3 to 5 day period, rather. Last time it happened in 2011, I believe it was 6 down days in a row, and then it sort of went sideways for a week or two. That's sort of what everybody is looking for to make decisions, and I really think the move after that is going to be lower. I'm sticking with what I've said all year, that we're going to be up high single digits, low double digits at the end of 2013. But right now, this sideways movement is needed. And again, the excess selling that happened yesterday probably is causing the rebound this morning, probably causes a little bit of a rebound for the rest of the day. But I think you'd be hard-pressed to get even 50% of it back in the course of one day. I think there has to be some sideways movement before anybody really comes in with any buying power at all.
All right. Bob, thank you.